Good morning, good afternoon, good night. Welcome back. Welcome to. Appreciate the support either way, cuzzies. My name is Joe Josh. I go by iChart Daily. Today is November 11th, 2025, and in today's video, get your notepads ready. I'm going to be giving you a window to my thought process on what I think is playing out in Bitcoin. Not my opinion when I say that. I'm going to be giving you what I think is playing out with indicators, charts, trends, support, resistance, the whole nine. I'm really going to dive deep into my process today and show you how to figure this out on your own, because that's the goal, right? This is an educational channel to help you understand technical analysis, not financial advice. Before I start, if you're looking for the latest and greatest, yada yada yada, X, it's the iChart Daily. Follow me, support the kid. We're here, falling wedge. We're coming down, right? So first thing I think of, let's delete everything. The first thing I think of when someone asks me what's going on with the chart is I want to see the chart. That's what I want to see. I want to see the trends, what it's done, how it's reacted to certain jab situations in 2020. Has it recovered? Higher highs, higher lows, up and to the right? Is it bleeding, etc., etc.? So as of right now, went from 15,000 to 125. Obviously, it looks a little top heavy just because, once again, if this is your first video, trend lines go with the trend indicator. Your MACD is a trend indicator, and on especially longer time frames like the monthly, the 3-week, the 2-week, and the weekly time frame, when certain things play out, like what I explained to you about death crosses and bearish structures and the stochastic below certain levels, it matters on every time frame. Every single time frame is going to have death crosses above, below the 50, stochastic above the 80. Are we overbought, oversold, continuation to the other? Every single time frame has them. It's just on the shorter time frames, they only last a couple minutes. On the longer time frames, they last months to a year. So myself, this is why I try and put this disclaimer out there. This is what I'm doing. You understand, bro? I don't know what you're doing. Your situation, your financial process, situation is just your first time buying crypto. I have been buying and accumulating crypto since like here, 2015, 16, right? Before XRP was on Coinbase and Binance Coin was $3 to $5, and people were just using it to avoid 90% of the fee. Like, this is what I'm talking about. Like, this stuff didn't even pop off yet. So my goal, I have been telling my community 17.5, 15.5, 13.5, right? So technically, my community and myself, we were up a cool 500-600%. So me, myself, and I have been taking profit at certain levels, right, on the way up, using like a time frame. I want to see how long after the halvening we're far out compared to the last halvening, and compared to the last halvening prior to that, right? I line up that confluence right away. I also look up how much the previous pumps have gone. They're getting smaller and smaller. So this one was like 1200%. So this one being 600-700% makes sense. Also, right, MACD death crossing, not a good thing. That instantly tells me that there's two sections. This video is going to be long. I'm going over everything. Two sections. Above the histogram, where it's green, below the histogram, where it's red. You could clearly see that there could be a death crosses, which is when the shorter time moving average goes above the longer time moving average, showing you have bullish momentum, but there could be one below and there could be one above. Two different scenarios that happen in the price action. When it's below, you can have a pump up. You're not going to make a higher high to the previous swings. When you have a golden cross above, you have a very high probability of your next swing that is forming. You can see here from 112 to 123. The 123 broke the previous highs of the 119. That's all we're looking to do, right? This swing high, this swing low, this swing low, this swing high. Why? Because this one was above the zero line, above the 50, and this was a beautiful move. This is what I'm trying to teach you. You need to identify certain things that play out in the indicators that let you know you have a very high probability of going long, or if you are below the zero line and your RSI is using the 50 as resistance and your stochastic RSI is either below the 50 or even better below the 20, you have a ton of room to bleed and you have a high probability of opening up a short. Then we wait for confirmation, right? Delete everything. You don't even look at the ticker. Just look at the chart and then look at the indicators and look at the waves. The most bullish confirmation is when you're forming these lower highs, lower lows on your RSI, your stochastic RSI. Let me move it over so you can see it. Your stochastic RSI is below the 50, below the 20. Momentum is horrible. Your MACD is in a bearish market structure below the zero line. Yes, you're going to have dead cat bounces, but you're not bottoming until your RSI breaks above, comes back down, forms a higher low, breaks 50 in a bullish cross above the 50 on the stochastic. We went from 110 to 117 and you open up your long. So with that being said, I could go to the 1 hour, the weekly. The only difference, let's delete everything once again. The only difference is on a daily time frame, these waves potentially take from the bullish cross, this and that, blah, blah, blah. From here to here is 11 days. I like that. I like to make 6-7% in 11 days. It allows me to live life instead of sitting in front of a chart. The reason why I don't like day trading anymore is if you go to a 15-minute, it's the same thing. Is it in a golden cross structure below the zero line and the RSI is here? We went from 105 to 106, but this move here above, and above, this was 3 hours and 15 minutes and a 1% play. Now, you can make money on that if you're using leverage, obviously, but I'm not sitting there for 4 hours. Now, same concept, right? Golden cross, death cross, above, below. Is the RSI above, below? Is it making lower highs, lower lows? Is it above the moving average? Is it below the moving average? Is it above the 50 line? Is it below the 50 line? Where's the stochastic? Is the stochastic below the 20, above the 20, above the 50, below the 50, above the 80, below the 80? It's all a matrix in the brain, right? Put on the moving averages. Are we above the moving averages, below the moving averages? We're below the moving averages, and we're coming down, and we're coming down. We could have a dead cat bounce back to the moving average like we do here, and we could come back and use the moving averages or around the moving averages as resistance. Now, one thing, let's continue. These waves, same thing. As soon as you have a golden cross above, forget it. Higher high is coming, right? You went below the 50, below the moving average, above, use it as support. Boom, right here, right here, right here. This is when your brain needs to say, open up the long, and this play from here to your death cross, or when you have bearish market structure, what is that? Volume coming down, death cross on the MACD. The first one is usually either the RSI or the stochastic RSI. You're looking to see when the blue line crosses, okay. Once you break from section A, which is the 50 to the 70, right? Bullish, bullish, bullish. Once you break the 70, mega bullish. Like everyone's high-fiving. Comedians are now doing technical analysis and doing courses. And you go from delete everything. Let me give you a good visual. Once we broke from here, we went from 81 to 106 in how long? From here to here. It was like 42 days, 30%. Now, what am I looking for to say when we're going to form a top? When does a top form on a weekly time frame? This is for the re's in the back because they're like, your technical analysis is wrong. Because I post a video that shows weekly, 2-week, 3-week, and monthly time frames, and 1 day goes by, even though I say this takes weeks to months to potentially play out. Now I'm giving you a visual to help you understand. This from the 80 line, right? The RSI was above, broke below. This is where I'm like, I don't like it, Johnny. It took 77 days of doing nothing, staying between 90,000 and 106,000 in order for me to see the RSI go down, come back up. This is the bear structure, right? Bullish structure, bullish structure, bullish structure. Boom, right there. Strike one. I'm like, I don't like it. Right? right here. This is what you're looking for. Does it come back up? Was this a fake out and does it come back up like this? Or is an actual break and change of market structure like this? You come down and then boom. This took from December 30th to January 27th of me, myself, my thought process. I don't care that you need content or you want to trade because you have an addiction problem. I don't care. I sit on my hands and I don't do anything for a month. Once I see the confirmation here, the double top end, we're breaking from section A plus into A. Example A, example B, right? 1, 2, boom. We are now below. Using it right here is when I open up my short from the 4th all the way to September 1st. So a whole month of opening up a short, right? So another thing that I wanted to show you, how long was the pump, right? The pump was just, here we go, break of the 50, break of the moving average, break of the 50 line, golden cross structure. We went from 88,000 to 120 something thousand. Your first time was 77 days, 40%, and we're still going 161 days in. Now, everything I just told you. Look at the current formation. We're in a death cross structure. We're still above the zero line, but whatever, right? RSI entering section B, but once again, is there a trend that we could use to help us understand if there could just be a fake out right here, right? And you could see, once again, 44 to 43, 40 up to this 50 line was used once, twice, 3 times. So we're going to assume, because there's a multiple touch point trend, it's not like the first time it's coming down, the second time, this is 1, 2, 3, 4 times. We want to see and assume that the trend is on your side until the end. So now we go to some price action. We see that Bitcoin went down to 100,000, came back up, right? It needs to stay above this 98 to 100,000 in order for this weekly to form this bottom. Let's look into how long the bottoms form. What I mean, this to this, this to this, this to this, and now we here. We just dipped our toe in the pool. Now we want to see how long does it take for little Johnny to put his knees, his waist, his body, and then he's fully in the water. Also, what we're looking to see is what price action did during these times, during this time, to show us what could be on the table this time. Also, you want to see if we do stop here, what could happen thereafter? What happened with Bitcoin here? What happened with Bitcoin here? What happened with Bitcoin here and potentially right here? That's the confirmation. And what could happen here? And also, I want to see where can Bitcoin go to if the bullish scenario was to play out. I also want to see if we come up, see rejection, and if the bearish scenario was to play out. So bullish is we find support at this level right here, okay? Then we want to see where resistance takes us, and you can see clearly lower highs each time. So to assume that the same pump that happened here is not going to happen here, is not going to happen here, because you're getting less momentum, less bullishness on your side. So we're assuming if we do stop here, how long does it take, and then what happens thereafter if we come back here. Now, to understand where your next where could be, we keep this line here like this just to give you a visual, but now I'm looking this way to see where we've stopped in the past, right? So you could clearly see, well, I could clearly see that the around, right? Let's just change the color because it's showing you 2 yellows. Let's change the color to white. So 58.56. The reason why it stands out is I'm looking for a zone that was used as previous support resistance multiple times. Something that stands out like a sore thumb. I also recommend not just using one time frame. Unfortunately, if you don't have the pro version of TradingView, it limits you on what time frames you could use. I'd never look at the 2, 5, 15, 30. My shortest time frame is usually like the hour to the 4 hour. If I really want to sit in front of a computer for a couple of hours and make a play. But for the most part, it's the same play, same lingo, just longer waves, longer time frames that I am doing. You could take the same thing, same process, and go do it on a 30-minute, cuz do what you gotta do. But back to the technical analysis. So I am looking for like, boom, touch points here. Okay, came back, touch point here. Okay, touch point here. Okay, touch point here, touch point here. Okay, and now I'm looking to see, was it ever flipped? Yeah, it was. Look at that. Boom, flipped right there again. So to assume that that level is going to be touched again is a good argument. Right? That's what technical analysis is. Is it possible for this to do this, stay here, how long, and come back to here? And can you make the argument that it would be another lower high situation to these previous three circles? Yes, you have even more confidence, more of a visual. All right, so here's the visual. Take a screenshot, do what you got to do. Most important thing is forming the bottom, understanding when, how long, setting an alert. Right, so I would set an alert below the 43.18, notifying you that this is over and we're entering a bear market. That's the bearish scenario. Or I'm setting an alert here at, let's just say, the 49.39 because you want this play to make sense. So you're right now, you're letting the bottom form, you're letting the bullish divergence form, you're letting the falling wedge play out, and then your play is from here to here, cool, 20% up. Okay, so now let's look at, keep this here. Okay, keep this here. What happened during the time that we were in the purple box? Okay, we came back to the moving average, like we've been coming back to the moving average, but the lows were getting lower and lower each time. When was the first time that it didn't go lower and lower? Okay, let's go over here as well. As you can see, right, we stay low, we stay low, we stay low, we stay low. The first mover was the stochastic above the 20, okay, showing us that the momentum's on our side. Then the next one was above the 50 and above the moving average, and then you had potential to go to the upside. Here, form the bottom, right? One low is here. We went from 53,000 to 68, but got rejected by the moving average, got rejected by the 50 on the stochastic, and we came back down to 56 to potentially 49,000. The reason why that makes sense is if you're using leverage, you're messing with liquidation zones, and it's a really sticky process. You need to know technical analysis if you're using leverage, or else you're just throwing darts in the dark and wishing for the best. And during a bull market, everyone's a genius because liquidation levels are never getting tested. During bear markets, your liquidation levels could get tested because you don't know if your low of, give you an example, 59 is the bottom, or it gets wiped out and 53 is the bottom, or it gets wiped out and 49 is the bottom. That's what I mean. And if you don't understand that the RSI broke above, this broke above, then you had a higher probability of making your first higher lows on the macro level, right? So then we come back here. So what are we looking for? Well, you find the trend and then you look in the past to see how the price acts in the chart. This chart now reacted when certain things played out, like when it's below the 50 and it's below the 50 and in the purple, you're using your moving averages as resistance. You're not making higher highs to the, let's just say 126 level. This is the 126 level. This is the 126 level. So we're trying to see, are we going to come back up, retest the 126 and break 126? And how long did it take? Did we make the same lows? What are we looking for? Well, we're looking for, once again, a break of the 50 and a break of the moving. As of right now, if I delete everything, can we pop back up to the 50 or even the 53, come back up, come back up to these levels here of the 115 to potentially the 119, but yet see a lower high and maybe even a lower low because of where the indicators are, like something like this. You could see this pop up, right? You could see this pop up like this. This was a nice, 14% out of Bitcoin. If I go here and I go to the shorter time frames, I do see once again, right, resistance, resistance, let's see, support. Now, once again, this is a falling wedge. I did just make a video for Altcoin Buzz that they're going to be releasing today that explains this and more. The same thing. It's just playing out. And, lower highs, lower lows. We're seeing 1, 2, 3, 4, 5, and we're here. So obviously, I'm going to set an alert, like you can see here. at the 107,874, notifying me that we are breaking market structure. Now, we don't usually break market structure until we form like a double bottom and we're getting hidden bullish divergence on the indicators, right? Everything that I just told you about breaking previous swing highs need to play out. Are we in a golden cross structure? Are we above the 15 line? Are we above the 15 line? So as of right now, we're below the 15 line. I'm going to show you another chart that helps you with Bitcoin understand the future. So let's go right now. Bitcoin needs to play out for the bulls, right? In order for this to break to the upside and where it goes to, I do think we come back down, potentially retest the 1013 or even the 102,195, right here. Then we form a nice W pattern to the 110 right here, and my levels would be here, and my other level would be here, like my greed levels. Most traders are going to use 6. I'll probably use 3 and choose like 111, 112, 115 to take profit if and when this plays out. So now you could see here we're down today, and I knew this was going to happen, and I posted on X that there was a gap. So the chart that you constantly need to be going back and forth. So I also want to sidestep real quick. Trading alts is tough, dude. And this is coming from someone who's like trading. I'm talking about like actually trading alts with leverage and figuring out the chart, because you need to look at not only Bitcoin, but your alt versus Bitcoin to see what it's doing, to see how it reacts when Bitcoin's doing certain things. If your coin versus Bitcoin is going up while Bitcoin's going down, it stays flat. If your coin versus Bitcoin is going down while Bitcoin's going up, it stays flat. If Bitcoin goes up while your coin versus Bitcoin goes up, it goes tremendous parabolic versus the dollar. You understand? So to do all that within the time frame that you're sitting in front of the computer, I'd rather just chart Bitcoin and trade Bitcoin, right? Now, like I made a video the other day on Gala, yes, I could definitely open up a small liquidation or zero leverage trade on Gala and then just set alerts, and then when that coin pops off, of course, I just take profit. But trading, like sitting here, actually picking levels, risk reward, when to take profit, moving your stop losses, like that's work, bro. You understand? Like, and you have to realize how long you're sitting in front of the computer, how much money you're making, the whole nine, and how much stress it takes. That's another thing. So here we are at Bitcoin, and the chart is Bitcoin BTC.D. No, I'm sorry, it's this one, BTC 1 exclamation point. It's basically the CME futures chart of Bitcoin, and the reason why it's important is because it forms gaps because of the market. The Chicago exchange closes just like the stock exchange. And because it closes and Bitcoin's 24/7, it forms gaps like stocks do in pre-market and after markets. And there's a rule that most traders and people in the finance know is gaps get filled. Now, when do they get filled? That's the question that most don't know, because it's not like it's a next day thing or it's a next month thing or next year thing. You don't have to take my opinion. Look at Bitcoin's chart, and when you can see there's a gap, it's not like it's a trend when, it's just a trend that it does. So this took like 21 days to fill. This one took 16 days to fill, right? This one took short. This one was just 4 days to fill, right? And also longer time frames, right? But you could see even this one, right? It's just funny how we went up, filled the gap, and then came right back down. This one only took 4 days. And the reason why I'm saying that is there was a gap on the daily and 12-hour time frame that formed over the last day or two when we popped up from the 104 to the 105, and I was like, are we going to fill that gap, come back down, form a higher low to these lows here, and form a nice W pattern that would give you a higher probability of breaking out once again to the 107, back to the 111. Your greed level is going to be that 114, 115. And then the most important thing thereafter is, do we make a higher high to this one over here after the falling wedge? So is it like 1, 2, 3, 4, and something over here using, like I said, those levels? Well, this chart over here shows a little bit better because there's no gaps, but these levels over here, right there, and we come back here, boom, like that, and here. And then what happens psychologically is we come back up, and all the shorts that thought we were going to break the 99 to 98,000 now, instead of understanding that it's just waves, just the waves take a long time. Like this wave took 20% and was like, 28 to 35 days. So the wave up could be another 25 to 38 days of the W pattern, right? And then another 25 to 40 days, and then another 25 to 40 days. So once again, the one W pattern could literally take until January, right? And all that does is once again fuel the bearish diversion. So that's the video. I hope you learned something. Once again, we're waiting for confirmations. We're using the indicators to help us understand if you're going to have a continuation to the upside, if you're going to get rejected from the moving averages, if you're going to use the moving averages as support, so on, and understanding where liquidity zones are, and if certain things to break down and you're breaking into section B, where could you go to, etc., etc. So a long video. I know it's a lot, but again, it's the same thing over and over and over and over. Where's the MACD? Section A, Section B. Where's the RSI? Section A plus A, B plus B. Are they forming bullish, bearish patterns? Is the RSI above the moving average, below the moving average? Is above the moving average in what section? Where's the stochastic RSI? Did it break below the 80? Did it break below the 20? Is it using it as support? Is it using it as resistance? The whole nine. It's one big calculation to help you understand what's happening in the chart on the longer time frames, and then the longer time frames help you understand if you're going to have continuations to the downside on the shorter time frames. Love you guys. Appreciate the support. If you know anyone that is looking to get into charting, learn technical analysis, or if you're part of any group, I would really appreciate if you just take these videos, share it, and be like, dude, learn. That's it. Enjoy the day. If you're looking to have me chart any video, specifically any ticker, specifically, leave it in the comment section. I'm making a huge list, and I'm going to do a live one day for an hour, and then just go over them all. So enjoy. Love you guys.